trades on average during the morning hours. We focus more on morning hours because the dynamics in the morning suit our methodology. And we also try to stay away from over trading and giving our brokerage firm more of our money. All right. All right, the market here kind of slowly dripping down. Again, if anybody has any questions, feel free to ask. If you look at the chat box window, you will see the levels in chat, in addition to any price action opportunities that are occurring. Well, that comes after the fact. I shouldn't say that. Just the levels. Price action depends on what happens once the market opens up. So, misspoke there. And I wanted to say the VIX is trading at an 18 handle. Yesterday we were 19, which surprised me a little bit, but 18 makes a little bit more sense, especially if we continue to uptick. Now remember, the VIX is a volatility index, and obviously the lower the VIX, the less opportunity we are going to have. It just seems to work that way. All right, slowly dripping down here a little bit. You can see our green band come in there in 55 for those of you who like to play the green band opportunity. It's just a moving average. We do have a couple of numbers coming out here at 9 o'clock. We have factory orders and then the JOLTS survey, which is just a minute here. Let me see if I can. Again, if you're playing our green band here, getting a little bit of a rotation here off of it. So that's a nice quick little scalp there. If you scale in around the 55 area, get down to 55 and a quarter there. So that's one of our price action opportunities for those of you who are like the green band. So it's just a moving average, 200 day. So the factory orders is coming out, and the JOLTS, which is a kind of a job openings, labor turnover survey, just a employment indicator that the Fed kind of has been using lately. Fix this a little bit here. Okay. So remember, Friday is Good Friday. The markets are closed, but they're still going to release unemployment on Friday. So that's interesting. That happens once in a while on Good Fridays. And this is that once in a while. So all right, so just drip slowly down to the 55, which is our green band area there, and we'll give it a nice little rotation. And you can see the blue band in our hourly is down at the 53 area. Again, if you're a little aggressive, want additional price action trades, they're there for you if you are looking for opportunity. Again, we are focused on having reasons to trade, not just trade for the sake of trading. And green band, blue band is a reason to trade. Price action, how the market stops at certain areas, technical reasons. Those are inter-day technical reasons or other price action opportunities that occur. So we have those in addition to our levels in case, again, when the markets are whipping around and there's more volatility, there's obviously more opportunity, both in price action as well as levels. But we are in these rally markets, which again are very difficult to trade and scalp because they seem to tighten up the ranges, as you can see here by the VIX being at an 18 handle. And there's really no pullback much. Yesterday there was after they made that high and then came right down to a pivot area there and then kind of held and then got quiet again. And also that's what happens. You get like maybe 20, 30 minutes of volatility and then they pull the plug on you again. So it's a very tough little trade when it starts the slow rally like it has been over the last week or so. So we have a couple numbers coming out here at 9 o'clock. We'll see what that does to the market. Let's see the central bank rate hikes coming to an end. Are the central bank hikes coming to an end? It sure isn't the down under, at least for now. The Reserve Bank of Australia is pausing an aggressive tightening cycle, holding rates on Tuesday for the first time in almost a year. Policymakers kept the official cash rate at 3.6% in Australia, taking a key time out to size up the latest market happenings and economic developments. The decision to hold interest rates steady this month provides the board with more time to assess the state of the economy and the outlook in an environment of considerable uncertainty, said the central bank, one of the central bank governors over there in Australia. Some further tightening of monetary policy may be needed. While opening the door to return to higher rates, growth and stability concerns might soon overtake inflation threats in terms of the central bank's top priority. Other global banks will also tighten at a rapid pace. The Federal Reserve hiking interest rates for 75 basis points in 9 sessions. Financial turmoil erupting and the collapse of the SVB Credit Suisse hasn't helped the situation. The central bank's attempt to engineer a soft landing to avoid a recession. The events in the banking system might also contribute to significant tightening in economic conditions over time. In principle, that means that monetary policy may have less work to do, said Jeremy Powell in the latest FOMC meeting, possibly overshadowing coming decisions. So, what that's kind of hinting at whether the Fed ends pulling a trigger on another 25 basis points in May remains to be seen. But according to the Fed Watch, those chances have been split down the middle. So that's why we're getting this little rally, I think, also in the stock market, because they think that interest rate hikes might be coming to an end here, at least for a little bit. So they the market feels that that's important, and I think that's why we're kind of having this little bit of a push to the upside. Now we continue to slowly downtick here. Support down at the 49 area. I got a couple numbers coming out here at 9 o'clock. Factory orders and the JOLT survey. Again, it's a employment survey, which unemployment is coming out as we quickly come down here to the 49 area. Well, we're trying to come down here to the 49 area. And if anybody has any questions, feel free to ask. I mean, if you're going to take the blue band here in our hourly, you're also going to have to take the 49 as well. That's kind of an average. Or you can just wait for the 49. So we got down to 50.75 there. Of course, like I said, I had 50. No, we're still on the same bar, so we'll see what happens. And if anybody has any questions, feel free to ask in the chat. 10-year yield is down to 347. Nice recovery here from the 4% level. And the twos are maybe low fours, if anything. I don't know where the twos are right now, but they've definitely cut the spread there between the twos to the tens. They were up over 100, 105, 6, something like that, but down to 60 based on the well, what the Fed started doing because of the bank situation. All right, coming back down here to the 49 area. Okay. Okay, coming down here to the 49 area now. Again, we were on the same bar, so it was definitely had a reason to stay with it. Okay, so we got the 49 now. See what we want to do here, or see what the market does. Again, we're just scalping the market, looking for take advantage ebbs and flows. If you're trading multiple contracts, you have the ability to scale out of them. All right, there we go. Nice little pop up here to the 51 to give us our quick 2-point scalp. Again, kind of just take what the market gives you and be happy with it. If you want to, if you have any extras contracts, then you could try to hold on to it and see if we can get a little bit higher more rotation. But you definitely got to take your profits here and then see what goes next. Took very minimal heat there, and so it was a nice little trade for us in case you did jump in. All right. Now, if you still have any, you can just take a trailing stop with the, with the extra ones, or just take some profits here and be happy with it. All right. So nice little rotation there against our 49. And again, we're just looking for opportunities to scalp based on the levels we gave out. And if you look at the chat, you'll see the levels right there for you. And you can see our first support level there at 49. And now we'll see where the market wants to go from here. Again, we're not trying to hit home runs. We're just we want to take advantage of ebbs and flows. And it's what we just got here off of our 49 area. Again, we stayed with the trade simply because we were on the same bar. And so even though we got down to 50, 75 there, we were able to stay with the trade, and then came down to the 49 perfectly for us and got a nice little rotation here off of it. Do have a couple reports that we have to consider, and those will come out at the top of the hour in about 11 minutes here. If anybody has any questions, feel free to ask in the chat. Again, if you're trying to stay long here, if you have any extra contracts and you're trying to stay a little bit long, again, you can have a trailing stop or put your order there. Again, it's just on any extra contracts that you have, not your main threat of main number of contracts. And then that way you guarantee yourself a profit here and try to take a little bit more out of the trade if that's possible. And if you're just trading one lots and you made your money, that's fine too. Nothing wrong with that. All right, so we have to deal with a couple numbers here at the top of the hour. Let's see where that brings us. All right. Again, we're just slowly kind of upticking here a little bit against our 49 area there. So if we had any kind of position whatsoever, definitely downtick to our support level at 49 and popping back up here a little bit. So again, you can adjust your trailing stop if you have one, if you're trying to stay long. If not, if you're flat, that's fine too. And now we'll look for to deal with this number that's coming out here at the in about 4 minutes, and we'll see what where we go from there. Yeah, I like to be flat when a number is released, so all right, come right up to our green band there. In case you were trying to stay long, probably a good place to exit, especially when this number is right upon us. Obviously, the 60 area would be better if you're trying to stay long. That would be our pivot. All right, number coming out here momentarily. We'll see if that does anything to the market or not. I mean, on the heels of well, tomorrow we've got a couple other employment numbers to be considered, and then obviously Friday the unemployment numbers coming out. So, but again, remember markets are closed, so right, then we'll see what happens here. They get up to the 55, which is our green band. Get a little bit of a rotation there if you're a little aggressive. Oh, I guess it's a little bullish. All right, they can bond market too liked it, or yeah, I mean both of them. Again, that's why we try not to have any positions on when numbers are released. Not our favorite. I mean, this time if we had any position on, you were going to be a little bit long because of the support down there at 49, but otherwise, you're not really having a position on, and coming right up here to the 60 area, which is our pivot. Bonds here really liking it. Look at that bond market. Woo! I think we're going to get dragged up here for sure with the bonds. Looking at the 72 above here. Again, we try to stay out of these rotations based on the volatility that might occur when these numbers are released. Obviously, a little bit of a surprise here. Again, the only position we could have had, if you were going to have a position, was probably be a little bit long based on the fact that we got long there at 49. But otherwise, we were flat, waiting for this number to be released. We do have our level here at 72, which would be where I'll get see what happens up there. All right, we're kind of hanging around our pivot area here. Very fluid little market, very surprising. Look at that, Joel. Look at the bond market. Wow. Very impressive. Oops. Impressive little move there in the bond market. Obviously, we are following that a little bit. Again, this is a perfect example why we do not trade. Don't like to have position odds when these numbers are released because you just never know what reaction the market's going to have to it. And usually, every time I had a position on when these numbers were released, I had the wrong position on. But so I finally decided, you know what? It's just like guessing, so I'm not going to try to guess. And this was when I was on the floor trading, and I didn't really have to try to get. I just always and it was a small position. It wasn't like a really big position, but it always like ruined my day, because I get caught in a big move on a small number of contracts, and you're like, oh, well, this has become a big problem. Went from a small problem to a big problem. So I've decided, you know what, it ain't worth the aggravation. And so I am trying to relay some of my uh, bad concepts to you guys so that you don't do the wrong thing. Bad trading concepts, bad trading ideas. All right, they drifted up to 63 and change, come back down. Again, I don't know if it's good for the bond, good for us. I don't know. Is that the way it works now? I don't know. We shall see. Kind of, this is like no man's trade here, right? We started at 55, they rallied it up to 63, come right back down here to 55. So, kind of, markets, the bond S&P is trying to decide what that number means. Okay, just give me 1 second. I gotta get the door upstairs. All right. Market here did drift down to that green band area there. And just like drifted down the first time to it, popped a little rotation. This time came off of those highs from that number being released and drifted back down to it. And again, depending on how aggressive you want it to be, could have maybe had a price action opportunity there. Bond market continues to just love this JOLTS number. I can't imagine it being the factory orders number that created this little rally in the bond market. Maybe it was higher than expected. Let's see if we can find out what the number was. Let's see. The jolts, they were expecting 10.5 million, came in at 9.93 million. So I guess less than expected, which means, finally there was not so many job openings. So it's not so many job openings out there. From 10.5 expecting to 9.9. I guess maybe that's good for the market. I don't know. The last one was at 10.8. So I guess from 10.8 to 9.9, I guess a million less jobs or so. I don't know. The bond market liked it. All right. So again, bond market's good to go. We're just kind of hanging here around our pivot area, right between our pivot and our green band there. Tough little range, but it's kind of just hanging here. We'll see where it wants to go. Obviously, we got to get above that 63 for us to maybe rotate up to our highs here. The 72 level would be our first resistance area. But right now, in the middle of this range here, pretty much no trade zone over here until it decides what it wants to do. All right, we're just kind of hanging around our pivot here. Kind of neutral, kind of not doing anything. Again, like I said, this is kind of no trade zone over here. It really could go either way. All right, again, a little range bound here, so nothing to get too excited about.